Are you ahead of the game? Keep up with the latest news and commentary on markets, regulation, and more. 2 wikis, video content, 7 newsletters, and blogs right at your fingertips. JohnLothianNews.com.
Tell us about Bank Havilland.
Totally focused on private individuals, wealth management primarily, does very little lending. Their model is to be very focused on a limited number of clients and be partners with them, basically. So if they're doing a project that they're investing in out of their own funds, they bring in like people to co-invest with them. And I think that's one of the big trends in the industry is smaller, more specialized, more focused institutions that are actually taking risk along with their clients, not just selling product to them and flogging off all the risks to them.
Your focus has been on the Middle East. How is that looking in terms of managed funds opportunities?
It varies, obviously, from country to country, but the sovereign funds, which are very well established in Abu Dhabi and in Kuwait, Bahrain, and Qatar, and newly established now, I think, in Saudi, they're very sophisticated, very diversified. There's limited disclosure, so you don't know. Nobody knows all of the details exactly what they do. But basically, they're invested in all asset classes in all parts of the world and have been for a long time. They've got both local and foreign staff that are very capable. Everybody's a CFA basically, and there's a lot of bright people there. They do look at new asset classes, but it's a long process to get them approved and accepted, I think. If you don't have a 3-year track record and you don't have, all of your compliance and all the infrastructure in place and can demonstrate that it works, you probably don't get a meeting to begin with, and if you get a meeting, you don't get a second one.
Are there opportunities for U.S. or European CTAs to attract investment flow?
There is a process that's required, and it does take some time and effort. And it's a bit difficult if you aren't on the ground there, because I travel to the Middle East from San Francisco. It's 16 hours on a nonstop flight. It's 12 hours time difference from the West Coast, still 9 hours from the East Coast. So when you get there, you're dead for a day or 2 or 3, totally off schedule most of the time you're there. And you need to be there regularly, quarterly for sure, monthly's better. Clients that I've advised on this, I always tell them up front, you really need to be patient and you need to commit a significant amount of time, and it needs to be from the right people in the firm. It can't be, a junior trader. It needs to be one of the principals, or at least a very senior trader. And you need the compliance guys in there, and you need to be able to explain in a very clear manner and support it with documentation, those procedures and controls and how you manage the risk.
How do you see the Middle East role developing?
They're going to continue to be a net investor rather than a user of capital. They're deploying more in the region, though, much more than they have in the past. In fact, many of the sovereign funds, their organization statutes required them to invest outside of the local market. That's changed, I think, quite dramatically in the last 5 or 10 years. There's a lot of investment going on in infrastructure, developing certain key industries. Aerospace, for example, is a very prominent one in the UAE. And you see the focus on alternative energy development. So there's a lot of research facilities. A lot of joint ventures have been set up with major global companies. They're bringing in the best in class from any place that they can. on the educational side, but also are developing more of the industries to service that domestic population.